Let's see what we got here. Samsung Q4 guidance shocks profit 18% less than the market expected, and the decrease is sharply due to the lackluster demand in its memory chip business. Man, I feel really bad for people invested in memory. Ah, crap. All right, guys, so all joking aside, in this video, I wanted to go over Samsung's Q4 guidance update and exactly what does that mean for companies like Samsung, Micron, and Apple that are in the memory and the smartphone spaces, and, you know, what can be expected out of those companies over the next couple of quarters, even over the next couple of years, because of this massive downturn that we are now seeing from both Micron, Apple, and Samsung now. So I wanted to just kind of go through exactly what was said in Samsung's report, and, you know, what does that really spell out for these other companies? So the biggest thing that I'll be addressing here is that based off of this Samsung guidance, pretty much the CNBC article says that the memory chip market has pretty much fallen off a cliff, and people are kind of blown away with how quickly it's falling off, how quickly companies such as like Apple, Google, and Microsoft are no longer, buying these memory chips in bulk. And, there's a massive slowdown in data center development, and there's also a massive slowdown in smartphone demand. And I kind of wanted to look at this because when this came out and everybody was kind of blown away that, oh my God, the sky's falling, tech is no longer, performing, I just kind of wanted to ask exactly, who is actually that has been following tech for, more than like, say, 3 weeks, who is actually surprised that any of this information is coming around, and who actually thinks it's as bad as, these analysts are letting it out to believe. If you guys have any opinions on this, make sure to let me down in the comment section down below. But, you guys know that I've been following Micron, just touched upon Apple just the other week. And honestly, nothing here is new. So if we look at, yes, the memory market has been in its decline over the past couple of quarters. And, at least here on this channel, my growing thesis is that it is largely due to the fact that because of Intel, data center development was slowed down. And if data center development is slowed down, you will no longer have this massive demand in memory chips. You also have relatively slow GPU sales, which also affects memory chip sales. And then you also have, now the two biggest smartphone players in the world are, experiencing lackluster sales. And so in my opinion, it's not really anything to be shocked about that this is happening. And so I wanted to kind of touch upon, what's going on with Micron. So Micron today, it started off strong, went down about 5%, and then rebounded to, just under about 0.75% today. And I think a lot of this is due to the fact that this is kind of the same story that we've been hearing. And if you look at companies like Micron, SK Hynix, Apple, any company that, is directly tied to the memory space, a lot of this information has been out there and has kind of been obvious over the past couple of quarters. If you guys have looked at any of my other videos, and I'll link to them here and down in the description, I've been talking about that ever since 2 earnings ago with Micron, so almost half a year now at this point. The memory market is going to be going through a slowdown, and now we're just kind of seeing that everybody's getting affected by it. It's not the fact that Micron, was going through all these issues and Micron as a company wasn't performing correctly. It's just the nature of tech and the nature of cycles in the chip business, and also in just the technology as a whole, and its cyclicality throughout a market cycle. I'm pretty much looking at this, and a lot of people are like freaking out about memory chip demand right now, and a lot of tech companies are now getting looked at a lot harsher than they normally were. You've seen companies like, say, Apple that have been in a massive downward spiral over the past couple of months, largely due to lackluster smartphone sales. But now you also look at Samsung, who is also experiencing lackluster smartphone sales. And again, I'm not changing my thesis at all right now, and it's the fact that there just isn't really innovation in tech. It's not that, say, people are no longer enjoying Apple phones. It's not that people are no longer enjoying Samsung phones. It's just the fact of the matter is that smartphones over the past 2 generations, realistically, all that you've done is you've changed the case a little bit. You've maybe upgraded the camera slightly, added a couple of more megapixels in it, made it a little bit faster, maybe added a gig of RAM. And at the end of the day, that's all you have. Pretty much everything that has actually changed isn't hardware related, it's software related. And if you're running a couple generations old phone, you can still get those software updates. So why would an end consumer go out and buy a smartphone? Each smartphone, the higher end, they're charging about $1,000, a pop nowadays. And there's really no reason why the end consumer would, have an excess demand over these new products with what's going on. And a lot of people are only kind of now saying that, okay, this is happening and tech is headed for its major slowdown. But I would argue that a lot of that slowdown isn't new. A lot of it has happened, gradually over the past 6 months, and now it's just blatantly in people's faces when they get their earnings reports, because no one's bothered to follow along with individual companies, kind of going from, on the day-to-day and really saying that, okay, when a company lowers guidance or when a company gives an update, that this is going to happen unless this company, gives some difference to their guidance. none of this is new. And so I just kind of wanted to, bring this out there because I know a lot of you guys are invested in Micron. A lot of you guys are also invested in Apple and Samsung. This isn't really too cause for alarm, in my opinion, because it's not like we're not already expecting this and we're not already, planning accordingly for this. Especially, if you've been following me, you guys know that I have kind of changed my Micron buying strategy ever since, a couple of quarters ago when they gave their update. I said that I would not be, averaging into Micron anymore until they start to hit about book value. And, a couple of weeks ago, they did hit below book value and I picked up a couple of shares. But you can also look at Micron as the fact that Micron is a company that is, regardless of whether or not you think it should or should not be counted as a cyclical, it is a cyclical company right now. And that's largely due to the fact that if tech is no longer booming, the modules that pretty much support the tech movement are going to be cut first, and they're going to get cut extremely hard, and a lot of their margins and their revenue and everything like that is going to fall drastically. And then so if you look at companies like Micron, Micron is currently trading almost at book value right now. So it's at 1.13. If you go back a couple of weeks ago and it was at $28 a share, it was at like 0.9 of a book value. And that essentially says that, you can buy Micron right now for essentially what they have on their balance sheet. So you're essentially, for every dollar that the company owns, you're paying $1. Or right now you're paying $1.13 for a dollar of the hard assets that the company has. And that includes cash, that includes property, that includes equipment. And in my opinion, and also I believe the reason why while this news was relatively alarming, there wasn't such a massive sell-off in Micron is because a lot of this has already been factored in. Now, the thing that I think is going to really tip Micron and the other smartphone manufacturers and other component manufacturers pretty much over the edge and really get them to really, unheard of values per se in their stock price is going to be once their earnings start to go negative or once they start to have major contractions in their order. And I know a lot of you are saying that, okay, well, if Micron, say if they lose half of their revenue, what is their PE? Their PE currently is at a 2.7. What's that going to go to? It's going to go to about a 6. Oh, well, I'll still buy a company with a 6 PE, but that isn't exactly the case. The case is that, this is the beginning of the downward spiral of this market cycle. But eventually, if it is a cycle like the last two that have happened in the memory space and in the smartphone space, eventually you start to hit negative earnings. So that means that the company will have a negative PE. It will be quote unquote worthless and losing money during this time frame. And then when it's hit these points before, it is trading even below book value. So that means that people are not even willing to pay $1 for the dollar of assets that, say, a company like Micron owns. And, it is traded as low as a value of 0.6 or 0.8 of a book value. So that means that for $1, for 80 cents that you put in, you get $1 of actual hard assets. And so in my opinion, that is the strategic way to really buy into these companies to gain that margin of safety and really take, an abnormal amount of return over the long period of time. And so I kind of wanted to just go over this quick, rant that going on right now because I know a lot of people have, they were buying into Micron and they were buying into Apple and they were buying into Samsung when they were all reaching their 52-week highs. And a lot of people were freaking out that, okay, well, why is it dropping so quickly? And it's like, well, if you look back a year ago, the stock price is already up over 100%. The company realistically doubled in a short amount of time because of the amount of money that they were getting. And now that cycle is just, starting to invert. And that's just natural. That's just the way that tech goes. If you look back at tech, and say you don't look at just, say, 1 or 2 generations at a time. You look at, say, over a 10-year time frame, it is not that unheard of for companies like Apple, Samsung, Micron, and then Intel and AMD and anything like that, all the semiconductors or all the companies that use semiconductors, to go through these cycles and these troughs that there is just no real innovation and there's no real tech needed for people to really, rush out and buy the new smartphone, upgrade their data center, upgrade their computer, and we're essentially at that point. We had a couple of years of massive innovation that made the entire tech industry boom, but we're no longer there. But that doesn't mean that it's not happening again in the future. It simply means that we now have to wait. And so my opinion, and again, and I've talked about this many times, and I'll do a pure Micron update video on this topic if you guys want. I just wanted to, kind of, give a rant out there of what's going on in the tech space right now, is that when you look at a company that has cyclicality qualities, you want to invest in it not when everything looks amazing, not when it has a price to earnings ratio of 2, not when things look like it's generating so much cash there's no way this company should be trading at the value it is. You want to start to look at the company when you know that, okay, the overall macro trend is saying that things are going to be just going horrible for, the elongated period of time. No one wants to put money in these companies, and then they start trading below what they're actually worth. So you can say that, yes, based off this price to earnings ratio, based off this peg, you know, Micron should be valued at $100 a share. And that's great. But the second that you take away, say, that growth factor and that earnings factor, you're left with something that has a large amount of, you know, room to fall, unless you fall back on what the company physically owns. And that is essentially where, you know, kind of the selling off stops, is at some discount to the raw assets that are on these companies. That is the real metric that you should really go for, and when's a good time to buy this company. Now, again, I'm no financial advisor, but, you know, if you bought into Micron at, say, $50 a share, and your initial point was that I want to buy in this company, you know, for the long term, and by long term, I do not mean, you know, a couple of quarters or a year. I mean 5 to 10 years at the minimum, because you expect that, you know, DRAM demand is going to continue to grow over the future. You think that technology is going to continue to rely on more and more memory over a long period of time. That thesis hasn't changed. All that's happened is that we are no longer in, you know, the boom part of the cycle, and we are now kind of going into the bust part of the cycle. And in my opinion, this is a much more attractive time to start to buy Micron than it was, you know, a year ago when it was at, you know, $50, $60 a share. And, you know, I've kind of voiced that opinion here on the channel a lot, but I don't think a lot of people really took me seriously when I meant that this company can drop like a rock. And you have to be ready to, you know, either average in, you know, hold on to your shares, or, you know, if you're not ready for that type of volatility, probably not be invested in the company to begin with. So I wanted to go over in this stock, in this company, that I know a lot of you guys are, you know, a lot of you guys are relatively new investors. You looked at the ratios, you thought they were too good to pass up, so you bought in them thinking it was a value opportunity. But in essence, the real value comes out when the company is discounted to what it's physically worth. And so for that, you can pretty much look at the book value, you can look at the balance sheet and see, okay, so I have to worry about this company going bankrupt. Am I getting a good deal? If I put in $1, how much money do I get of, say, a company? And so right now, for every dollar you put in, for every $1.13 you put in, you get $1 of physical assets of the company. And in my opinion, back when it was $60 a share and was trading at a book value about $3, that's a much better, you know, opportunity for you to really generate wealth over a long period of time. And especially whenever it dips below 1 of a book value, that is when you should be more and more greedy, and while other people are fearful, to quote Warren Buffett, to really average into these type of investments. So I know that this was a little bit of a rant, but I also kind of wanted to say that between everything that's going on in the tech space right now and all of the bearish sentiment that people are saying based off of these numbers that are coming out, and if you have followed any of these companies and you've paid attention to any of their earnings reports over the last couple of quarters, they all said that this was coming. People are now just shocked that it's finally here. And so I wanted to just let you guys know, you know, try to not lose your cool, understand that this is part of the cycle, understand that if you had a vision of why you wanted to be invested in this company for the long period of time, that essentially hasn't changed at all. And so I highly recommend that you guys go and you look at what is going on physically with the company, but not, you know, in a 1 to 2 year type of mindset. Look at, okay, what is the company planning on doing over the long term? What are other companies doing over the long term? Exactly how feasible is that going to happen? So, you know, if you look at Micron and you look at, okay, Micron is going to continue to make memory chips, assuming memory chips are continued to be in demand, aka meaning that data centers, smartphones, and, you know, computers and other tech and autonomous cars are going to continue to be innovated over a long period of time, memory chips are going to be in a high demand. And so essentially, if you believe that, the lower of a cost that you can get in a Micron, the better, assuming that, you know, the fundamentals with what's going on with management and what's going on, you know, on their balance sheet is adequate for your investment goals. I personally don't see any negative side to this. I think it's actually an attractive buying opportunity for these companies now, way more than it's been over the past 2 years. So sorry for that rant. I wanted to just kind of throw this out there. I know this wasn't really a, you know, formulated video. I just kind of looked at this and then saw a lot of people, you know, freaking out on my Instagram account. And I just kind of wanted to address this whole topic. So thank you guys for watching. Let me know what you guys actually want me to touch upon directly in this whole thing. If not, I plan on doing a market analysis on Microsoft and why I do not personally buy Microsoft at current levels, but I do think that the company will be, you know, great in the future. So that's going to be the next video, unless you guys want me to do a different video. Make sure to let me know in the comment section down below. Thank you guys for watching, and I'll catch you guys in the next video. Peace.